And this is why they don't want to, nobody wants to be the last person holding the big bag of dollars, because this system is going to collapse. And the dollar will ultimately achieve its true intrinsic value, which is zero. Because every fiat monetary regime before the dollar has ended up exactly that way. You see, fiat money has a perfect batting record, okay? Can you imagine somebody in Major League Baseball with a 1,000 batting average? Fiat currencies have a perfect batting average, 1,000. And they all end in one place, and that's zero.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Welcome to the Silver Doctors exclusive. Excited to have returning guest, Mr. Rob Kirby. He's an analyst as well as a commentator and a precious metal enthusiast. So Rob Kirby, welcome back to Silver Doctors.
It's a pleasure to be with you again, Mike.
Well, I appreciate you taking time to sit down with us, and we're literally 2, maybe 3 weeks away from the end of 2019. Curious to find out at this current moment, what's your assessment on this past 2019, and with 3 or so weeks remaining, what do you foresee happening?
Well, I think we can pretty much sum up what's occurred in the metals markets this year, or what's characterized precious metals debacle this year. Although prices might be higher than they were at the beginning of the year, what's occurred in general this year is best summed up by the little stunt we saw happen on the COMEX this morning at 9:40 or thereabouts. We watched the gold price do a swan dive, $20 swan dive into the pavement in a matter of minutes. And this is what typifies the activity on the COMEX exchange in New York. Time after time after time, we'll see the price of precious metals grind higher over long protracted periods of time, and then we see the price literally fall off a cliff and go into the sewer in a matter of minutes. And this is absolutely hallmark intervention and price suppression, which continues to occur on an ongoing basis, because regulators in America do not regulate, and keeping the price of precious metals in check is official U.S. government policy. And we see it being exercised and enacted in real time, time after time after time. So we've made some progress this year, but in actuality, regulators still aren't regulating, and the official policy of the U.S. government, the U.S. Treasury, and the heathens at the Federal Reserve is to keep the price of precious metals suppressed, and that's what they're doing.
Interesting. So I'm curious now. And so this recent spike down you're referring to as of today, was that as a result of the FOMC activity yesterday and perhaps Christine Lagarde's first public address today, or what do you think that was? What led to that, and why?
Typically, Mike, we see these swan dives occur during FOMC meetings. Like this week, it was a 2-day meeting. It was a Tuesday, Wednesday affair. Typically, we'll see the price of precious metals get beaten up during the time when the FOMC is meeting, or in reaction to publishing a Fed minutes immediately at the conclusion of a FOMC meeting. But this time there was a day delay, so maybe they're changing their MO just a little bit. But I mean, at the end of the day, it's very interesting. I communicate with a lot of people on the net, interested parties, and this morning the comments that were circulating in the group as early or as late this morning as 9:15, minutes before the swan dive in the gold price, people were saying, maybe this time it's a little bit different. And, literally within minutes of people saying maybe this time it's different, it's the same. And it was just delayed a little bit. So maybe somebody slept in.
Slept in. Now, it's unfortunate that there hasn't been any real action apart from earlier in the year that there was a little spike in gold prices. I think the last time we spoke there was a time frame where it was rallying a little bit, and so I assume that they're aware of the fact they don't want it to get out of hand, so this is a continuous slam down. And so I'm assuming they're preparing or setting up for 2020, which is going to be one of the things where we all can anticipate an increase in price as well. So at this current moment with the FOMC, them not deciding to move interest rates, what are your thoughts on that right there? And is that a indication that they are attempting to keep their credibility if they still have any left, or what? What are your thoughts on that?
Well, I don't think the Federal Reserve has a whole lot of credibility, certainly internationally, because we're seeing the dollar be abandoned by countries around the world. We're seeing crude oil being sold for other than dollars in many oil producing countries now. I believe it was the Japanese just announced a big trade deal. I believe it was earlier this week or late last week, and I believe it was with maybe the Philippines, where their dollar used to be all denominated in, or their bilateral trade used to be all denominated in dollars, and now they're going to have it all settle in local currencies. So, and this is only one of many such trade arrangements where formerly countries settled their trade in dollars. Increasingly, countries around the world, whether it's involving China, Iran, Russia, oil producing countries, period. They're all starting to settle their trade in other than dollars, and this is undermining the underpinnings of the petrodollar. So the dollar has some very rough times coming soon, and it's I find it quite amazing, actually. The namesake of your platform, I believe it's Rethinking the Dollar. Very appropriate, because it seems that many countries around the world are rethinking the dollar, and a lot of them are moving away from it.
Right. I would agree. Sorry, go ahead. Sorry.
So, no, it's just, and the reason this is occurring, Mike, is the stewardship that's been demonstrated by the keepers of the dollar. It's just not cutting it with it. We have issues outstanding that haven't been explained. I like to reference quite often, because it's starting to gain some traction, I believe. But the work of Dr. Mark Skidmore and Catherine Austin Fitts regarding 21 trillion in missing money. This is money that was conjured out of thin air, dark money. It's not even acknowledged by the keeper of monetary aggregates, the St. Louis Fed. It's not even acknowledged to exist. And it's 21 trillion or more, conjured out of thin air, and it's used as a rainy day fund. And this is money that gets put to work when they need to prop up a bond auction, or when they need to order the price of precious metals down, like the swan dive, recently, just this morning, that I referenced. These interventions, Mike, aren't cheap. They cost somebody a lot of money. And, this is where a $21 trillion rainy day fund comes in very handy. And there's a lot of people, naysayers, I call them ostriches, who have their heads buried in the sand, who like to claim that, the notion that there's 21 trillion in missing money. They like to claim that that's a conspiracy theory and it doesn't really exist. Well, let's just put it this way, Mike. When the question was put to the administration, can you please explain to us fundamentally how much money exists? And that was really the upshot of this work done by Fitts and Skidmore. It was directly questioning how much money really exists. And the answer they got, instead of anything with some clarity or some transparency, the response was for the federal government to pass new financial regulation known as FASB 56. And FASB 56 excuses the federal government from accounting, which basically means they were giving the people asking the fundamental question about how much money exists, the administration was giving them the middle finger, saying, no, we're not going to tell you how much money exists. We don't have to tell you how much money exists because we're excused from accounting, and we can keep two sets of books, and you can't do anything about it. You know, and with basically with the stroke of a pen, what that means is we can't take seriously anything the federal government in the United States of America tells us about their financial condition, how much money exists, or the true extent of their indebtedness. Right. And you know, when you were the steward of the world's reserve currency and you're pulling crap off like that, and you expect countries around the world to continue to settle their international trade accounts in dollars, like, you got another thing coming to you. So this is the reality that we're facing, and you know, to me it means that the dollar is going to be let's just say less accepted as time moves along, and whether we reach a point where there is a cataclysmic fall in the value of the dollar, I don't know. But I mean, it wouldn't shock me if that were to occur.
Right. Now, one of the things I'm curious to get your thoughts on, and so with the dark money that you reference, it's out there, it's unaccounted for. Who knows how much outside of what was currently calculated as being missing. Then we have the current repo action, and so my thing is, if where that currency exists at, why wasn't it used for the repo activity to keep things hushed to where it would have been no need to tell us about all the activity behind the banking sector, lack of liquidity? Why wouldn't our funds be used for that? So why are they back directly creating reserves on top of what's already out there that we don't know about the total amount? So that's two different, their direct activity and then the hush money over there. That's a lot of excessive dollars that are being brought into existence.
Well, you see, I view it from this perspective. The amount of money that has to be fed into the system, okay? And when we talk about the amount of money that has to be fed into the system, I like to reference Chris Martinson's work on. He did a brilliant expose. It's called The Crash Course. If you Google Chris Martinson's name with Crash Course, you'll be taken to an expose that depicts the life cycle of fiat money. And the life cycle of fiat money is this. It grows at a gentle upward slope to the right until, and this is any fiat money system with compound interest. So the growth rate of money grows very, very, at a very shallow pace, upward to the right until it inflects, and then it goes vertical, which means that basically infinite amounts of money have to be shoveled into the system perpetually, or the system collapses upon itself. And we are on the vertical growth curve of the dollar's fiat life. So the amount of money that needs to go into the system is growing at a vertical pace. And to satisfy that condition, you know, we have public ad, which is the identifiable and admitted repo activity and outright purchases on the part of the Fed. But you see, that's not enough. So there also has to be stealth money ad. And you see, it's amazing that Martinson produced this expose called The Crash Course at the conclusion of the world financial crisis back in 2008-9. And, you know, back then, I mean, I realized that money growth had to go vertical myself. I just understood intuitively. And I mean, we saw the inflection point when the Fed grew their balance sheet from roughly 800 billion to over 4 trillion in a matter of months. and that was the inflection point. And you know, if you look at the Fed's balance sheet, 10 years later, it looks like this vertical growth petered out. But it only looks that way if you're not accounting for or understanding that this extra 21 trillion at least was created over a period of from 1998 to 2015. That's the period of time that Fitz and Skidmore's work covered using government data. And so this money was created. And the thing that really stands out in my mind is that Chris Martinson's work, he published this crash course in 2009. I think it was February of 2009. And he modeled, you see, what I'm talking about here isn't an expression of my thought. It's mathematical, it's literally math. We're dealing with mathematics. If you have something growing at a compounded rate, you know, in perpetuity, the amount of it inflects and goes vertical. And this is what money is doing. This is the way the system is designed to operate. You know, the architect of our current monetary system, John Maynard Keynes, you know, people told him back in the day, they told him that his system was designed to fail, okay? And we are watching it and witnessing it fail in front of our eyes right now. And you know, John Maynard Keynes was a very arrogant and a very he was a cretin. This man was an evil human being. And you know, when he was presented with the fact that his system was designed to fail, he just looked and shrugged and said, "So what? In the long run, we're all dead anyway." He didn't care. And you know what? And the people running our system today, you can account on one thing for certainty. Chris Martinson modeled this inflection and demonstrated how the growth rate of money would have to go vertical. And if he did it in 2009, you can absolutely bet that 10 or 12 years earlier, the Fed modeled it and knew this would happen too. Because they model everything under the sun, and they know everything about fiat money because this is their baby, and this is their lives, and they knew 10 years, 12, 15 years in advance under this time period when they would have to grow the money vertically, and this is why they started to prepare as early as 1998 by siphoning and stealing money out of darkness and depositing it in repositories like the Exchange Stabilization Fund, the secretive adjunct of the U.S. Treasury that's accountable to nobody. And they started putting away this rainy day fund as early as 1998, possibly even earlier. Basically, it was right after the repeal of the Glass-Steagall Act that we saw all this financial shenanigans start to happen in a really robust nature. And what they've done is they've built this rainy day fund, and they are using it and administering it like a drug dealer would administer or sell heroin to his junkies, because the system has to grow and money needs to be fed into the system at such a phenomenal rate. You know, its growth is vertical. And the big trick, the really big trick, Mike, when you're feeding that kind of money into the system, it can have very deleterious effects on the economy. And this is why we see American adventurism all over the world militarily, because when you're creating all this money, if it goes to work in the domestic economy, it creates something we call hyperinflation, where it's very visible that the money's being spent and put to work in the domestic economy. But when you're spending $7 trillion over 10 years making pockmarks in the sand in the Middle East, it's like the money just disappeared into the sand. Yeah. But understand, the money had to be created. Okay, so then the real big trick is, how do I keep it from spoiling my domestic economy, where we live in this Alice in Wonderland world where we tell people that inflation is under 2%. Well, you make sure that the money gets spent blowing stuff up in the sand. And it's like presto, it disappears. The other great trick they have for getting rid of the money or hiding the existence of all this money being spent is we've seen American oil output has gone from a low water mark in 2008 of under 4 million barrels a day to currently America's producing almost 13 million barrels a day, record high, and the last 4.5 million barrels of expanded American oil output has come from shale oil. And let's just say everything in the shale universe, whether it's natural gas or whether it's oil, is being produced pretty much at a loss, all of it. Like natural gas, the break-evens on natural gas from shale, I think the cheapest shale natural gas field, the cheapest one I think has a break-even of $3.16 per unit. And I mean, natural gas is trading at $2.40, in the wholesale market. Yeah. And, some of these shale natural gas producers have break-evens of like $3.80. I think one of them has a production cost of over $4. So, like, they're hemorrhaging money to produce this oil, this gas, and the oil extraction from shale isn't much better. And, who's writing the check? Why is this stuff being produced? I can tell you the only reason it's being produced is because it's priced in dollars. And it helps to absorb some of those transaction dollars that aren't being used to purchase Russian oil, Venezuelan oil, Iranian oil, and probably Saudi Arabian oil, because these countries are all selling oil in other than dollars. And you see, this has undermined the support for the petrodollar, which is the namesake of the American dollar internationally. And so, when Russia stopped selling, I don't know what they produce. I think it's like 6.5 million barrels a day. When Russia suddenly stopped selling that for selling 6.5 million barrels a day in dollars, and instead they're selling it in euro or Chinese currency, that means there's a whole lot of dollars that formerly were being used to purchase Russian oil, which suddenly are just left there. And if you don't engage those dollars in something else, the tendency is for those dollars to return home. They go back to America. And then you've got all this extra dollars in the American economy looking for a home, and what does it do? It bids up the price of everything tangible. And so instead, this is why America has ramped their oil output domestically from under 4 million barrels a day today to almost 13 million barrels today. And, because they had to soak those dollars up, because, other countries formerly selling oil for dollars, they vacated. Yeah. So, this is what's going on behind the scenes, and this is the stuff that the mainstream financial press refuses to talk about. No discussion of it.
Yeah. So interesting. I'm sorry. Go ahead. Finish off.
No. It's diabolical what's going on. It's utterly diabolical.
All right. So we are a couple weeks away from 2020. Equities markets. Do you see equities, bonds, all those things? So all that hush money, that last bit of reserve currency status funds that keep this thing propped up, 21 trillion plus excessive repo activity, and it's not QE, but it is QE. Who knows? But it's reserve creation. It's going to be from here. It's our new future heading into 2020. And so, do you think we will see an announcement of some kind of the repo activity turning into quantitative easing, or can they keep this repo liquidity situation going throughout 2020, or what? Do they have to announce that it's actually quantitative easing officially?
Well, whether they announce it officially or not, You see, all this repo activity and Fed purchasing of securities, what it is illustrative of is rejection of dollars. Okay, the underlying cause for all of this activity on the part of the Federal Reserve, it's all because the dollar is being rejected.
Mm-hmm.
And this is also the reason why the 21 trillion in missing money, which is probably more than 21 trillion, but the reason that's being mobilized is because the dollar is being rejected, and the pool of dollars in existence has to grow.
Mm-hmm.
And the pool, you see, the pool of dollars, the reason the pool of dollars has to grow, Mike, is because in the US dollar universe, every dollar ostensibly that's created, except maybe this dark money,
mm-hmm.
but every dollar that's created is lent into existence. So when the Fed creates money, we have a debt-based monetary system.
Mm-hmm.
So when the Fed creates $1 million of new money, they issue a bond, okay? So somebody or something buys the bond, and $1 million is created, but the bond has a coupon, okay, which pays interest. And when the $1 million is created, the interest isn't created, okay? So therefore, you need more than $1 million to repay the $1 million that's created. I don't know if you're following me.
Yeah, I am.
So if you create a debt instrument with a coupon and you create $1 million in new money, you need more than $1 million to extinguish that loan. Mm-hmm. Okay, but now think about if you ramp this up, indefinitely, and you keep creating new debt. You see, the interest amount is never being created when you issue new debt. And what happens is the interest amount piles up and up and up and up. And then it's just, ultimately you get to a point, and this is where the inflection comes in the growth rate of money. Because you get to a point where even if the coupon rate is very low on the bonds, the new bonds being issued, you reach a point where the amount of interest that's required to service the existing debt becomes so big, it starts to grow geometrically. And you see, this is the part of the curve on the money creation curve we're on now. The amount of money that needs to be shoveled into the system to just keep paying the coupons on existing debt have become so onerous. It dictates that this money must be fed into the system or the system collapses. And you see, holders of US dollars, they don't live in a vacuum, okay? And they understand the inherent weakness in the fiat dollar system. And this is why they don't want to, nobody wants to be the last person holding the big bag of dollars, because this system is going to collapse. And the dollar will ultimately achieve its true intrinsic value, which is zero. Because every fiat monetary regime before the dollar has ended up exactly that way. You see, fiat money has a perfect batting record, okay? Can you imagine somebody in Major League Baseball with a 1,000 batting average? Fiat currencies have a perfect batting average, 1,000. And they all end in one place, and that's zero. And if you think the US dollar is going to be any differently, I would only suggest you think again, because they all end that way.
So, Rob, you painted a very dark picture for the fate of fiat currencies, especially the current reserve currency. Precious metals, gold and silver, prices were slammed down today, but that could be a good thing for those that are in tune to the importance of having it. Give us your thoughts on gold and silver and or a strategy. Give people some type of strategy of what they should do.
Sure. So now people, in a general sense, people would refer to me as a gold bug or an advocate of metals and hard currency. And the reason I do, I just mentioned to you that fiat currencies the world over, and there are hundreds of them in the history that have all gone to zero. they have a perfect batting record of going to zero. Okay, precious metals also, particularly the monetary precious metals, gold and silver, they also have a perfect record. They have never gone to zero, and they have always stood as money. And they have a history of being money that is thousands of years long, and they've never once gone to zero. And so what happens when these fiat money regimes go to zero? Typically what goes on is the value of physical precious metal, it revalues into whatever the new currency of the realm is. If it's not specie itself, it revalues into fair value in terms of, there's some universal constants. If you go back to like Egyptian times, an ounce of gold would buy you, in Egyptian times, it would buy you, like basically a toga or the suit of the day, a belt, and a basically, let's just for argument's sake, let's just say a man's business outfit. And throughout history, an ounce of gold typically buys a suit, a belt, a pair of shoes, and a belt. And, like an outfit. So that's a universal constant. And because a suit and a belt, in 1900, a suit, a belt, a pair of shoes, and a shirt might have cost $20, and today the same is $1,500 or $2,000. You see, it's not the value of the suit that changed. And in gold terms, the value of a suit really, the ensemble hasn't really changed. In metals terms, it's only changed in dollar terms. And the reason it changes in dollar terms is because debasement and money printing. You see, if you create an infinite amount of something, the value of the last unit created is usually not, except in the case of the dollar, of course, the value of the last unit produced isn't going to be the same as the value as the first unit produced. And with fiat money, that absolutely is the case, unless you employ trickery and deception and are creating money, dark money, that people don't understand or it's not acknowledged to exist. You can hoodwink people into believing anything. And this is the world we live in today. And listen, for people who have trouble getting their minds around, whether anybody would do anything as monstrous as what I'm suggesting has occurred, look at the explanations we have for everything from the assassination of JFK, Martin Luther King, whether it's 9/11, whether amazingly, Mike, there are people that actually believe that Jeffrey Epstein killed himself. Like, I don't believe that for a minute. So anyway, people are welcome to believe what they want.
Yeah, it took him two tries. It took him 2 tries. We're told it took 2 tries. He attempted twice, and he succeeded on the second one. So, if that was the case, after the first, you would definitely make sure that there's no way in the world he could if he tried again. But somehow they let that slip through. So, So, Rob Kirby, it's been great once again having you on Silver Doctors. And so, for those that may be coming across this interview, coming across it for the first time, can you point them back to your direction so they'll know more about your work and how to follow to be a blessing to your work?
Yeah, you can catch me on the web at kirbyanalytics.com.
Sounds good. That was sweet and simple. So once again, Rob Kirby, it's been great having you here on Silver Doctors. Looking forward to continue to follow your work, and definitely when we in 2020, have you back on the show, and we'll see where we're at then, and hopefully not as bad as you painted it kind of sort of in this interview here, but I know it's coming. So get prepared as best you can. So that being the case, Rob Kirby, thanks for joining us on Silver Doctors.
Been my pleasure.